Okay, so it's a wild and crazy ride on Wall Street today. The Dow Jones Industrial Average opened down some 1,400 points, and it's been all over the place. We've seen a bit of a rebound. The market opens at 9:30 Eastern. It's now about 10:20 Eastern, and in that time, the market is currently up, of all things, by full percentage point, up 367 points. Looking at the similar S&P 500, we're seeing profit taking up about 1.5 points. The NASDAQ up 2.5. I always find the Russell 2000 index very interesting. That is still down. Those are small cap companies, and that is down 2.6%. It might be in some ways a better indicator of the general state of business, at least on the short term. So let's get into some of the details that we saw over the weekend in the financial turmoil. The S&P, so we already got into that. The overnight stock futures plunged, but now we're seeing a lot of recovery from that. So we may, I don't know if we're out of the woods yet. Aquiles will be able to maybe tell us that. Trump's tariffs policies are, of course, the precipitating factor in what is now the fourth day of a slide. Trump imposed a minimum 10% tariff on all U.S. imports, bigger rates, as high as 50% supplemental for countries like Lesotho, 34% for countries like Israel. And there's been a ripple effect all over the world. Asian markets like South Korea's Kospi index dropped 5.6%. Germany's DAX fell 5.8% in morning trading. We always look at those because obviously the time difference sort of helps us see how things might be looking ahead. JP Morgan and other Wall Street strategists are now seeing a heightened recession risk. The estimations go from anywhere from 30% to as high as 60 to 70%, depending on which bank you're talking about. Joining us to talk about the crisis in the financial markets is Aquiles Larrea. Perfect person to talk about all this. Thank you so much for joining us. He's the CEO and founder of Larrea Wealth Management. He's also the author of the book Wise Up With Your Money, good advice that you should take. Check out his new YouTube channel, Aquiles Larrea 1061. That's Aquiles Larrea 1061. Aquiles, thanks for joining us once again.
So happy to be here, guys, and such wonderful circumstances.
Well, maybe the market's while you were on hold, the market was rebounding. Maybe the
I saw it come up.
Aquiles is going to be on. It's like it's going to be okay.
Yeah, it's funny. We talk about the markets and all the turbulence we've been seeing having to do with these tariffs, but we forgot one thing: the market. You have buyers, you have sellers, and at the
Always.
end of the day, I'll tell short sellers or the people who want it to go down or people who buy puts, who want it to go down. At some point, you got to stay at your desk because, and I used to be one of those guys, because you got to cover your shorts. All right. If not, you're going to get it all over your shorts. All right. So just remember, with every downtrend that we see, that at some point it's not sustainable. So if it's not sustainable, what ends up happening is that it starts going back up. I see this as really a response to the last 4 days more than a permanent trend at this moment. I still see a lot of volatility going forward. We're still going to see the tariffs cutting in. That recession number that you just quoted being from 30 to 60%, I just heard this morning it's going to be more likely like 60%. And
Yeah.
my personal feeling on this is, okay, if we're going to touch off a recession, let's get it out of the way. All right. And people are looking at me, what do you mean, let's get it out of the way? And I say, well, you want to get it out of the way because most recessions don't last more than 6 months. All right. And if this is it, if this is going to happen, it's not like it hit the door and said, hey, I'm here, do something about me. No. So what we have to realize is that if it's here and it's affecting us, let's get it out of the way. A lot of recessions may only be 1-2 months, where you see that negative GDP. All right. But if you see it 2 quarters, then it's officially a recession. So we don't have all that information. We don't have all the evidence right now, guys. So what I would say to you, if you're an investor, and I'm saying this to my clients right now, is that there are great buying opportunities out there. I myself have been going out into the market buying some stocks for clients that I feel, I've been talking about this on all media outlets, and I'll say it here. You want to buy high quality companies, good dividends that are going to make you long. You got to think like 10 years on this. Some people can't even think 10 seconds. And here I am talking about 10 years. But you need to think about this minimum 3 years. All right. If you're going to go in at this particular point. But I think that we're going to have a turnaround. I talked about this. I had my Simpsons moment, where I made a prediction back in December on a network. I said, we're going to have a correction. It was precipitated by these tariffs, but now we are entering, this is the end of the first quarter. We're finished with that. So we'll see what kind of numbers and how they affect us at this particular point. But what I see moving forward is a very cautious investor. At the end of the day, you need to be cautious, you need to be strategic, but you also need to be intelligent. This is not a game for the timid. And if you think that, you don't belong here.
Yeah, and don't
Just
panic.
very simple.
Don't panic.
All right.
Never panic.
Yeah.
Aquiles, let me ask you. This feels. I used to work at Bear Stearns and Industrial Bank of Japan, Bank of New York. I remember. To me, this feels a little bit different than those earlier downturns, like
Doesn't
87.
it always?
No two are the same, right? They're like snowflakes. But this one, it seems like I totally agree with your take. This looks like. It's the actions of the president triggering some, panic about fundamentals. Normally, or typically, it's a bubble breaks, like the real estate bubble breaks, or so that was also part of '87. We've had a bit. I think we've had a sort of undiagnosed real estate bubble now for the better part of 2 years, maybe 3 post COVID, and coupled with a frozen market. But I can't think of a time where a world leader, one person, made an announcement, and the next thing you know, it triggers a 4-day or a 3-day rout in global markets. I mean, it just seems really different.
Well, it's a legitimate point, but I also want you to think of something. Anything in the world could precipitate a downfall, downtrend,
Sure.
right? Let's go back to, you talked about bubbles, way back when Alan Greenspan said this irrational exuberance happened. He sent the markets roiling for days, and at the time I was a young advisor saying to myself, this guy's a jerk, but what he was really doing was trying to get a shakeout from the move to the upside that we had seen unprecedented at that time. We have had an unprecedented move to the upside, guys. Unprecedented. And I was hoping that this correction would come sooner. Sometimes we just need a catalyst. You have to think of it that way. And this was the catalyst, good or bad, ugly, indifferent. This catalyst took us to a new level of fear mongering.
Let's talk about Trump and this catalyst. And I want to let Manila get in a word as well. Sorry, I'm mansplaining here because I'm so interested in this topic. But I mean, is this the White House says that 50 out of the 60 tariffed countries have all requested trade talks. So this might be
Netanyahu is here today for that specific reason.
Right.
Not about Gaza.
Right. No, fuck Gaza for him. Right. But like, but like the Nixon madman theory. Right. It's like basically the idea is you make everyone think you're insane. They know you're serious. They all come to the table. Is it possible that in a week or two, everything's going to bounce back up because Trump will have settled all of these trade disputes? The tariffs will either be rolled back or eliminated, and we'll look back and be like, "Well, that was weird."
Well, you bring up a great point. So he goes in, and we have all these countries that now want to play ball. Good on him, right? Great. But is it going to resolve in a week? Could be a lot longer than that. All right.
50 countries is a lot of countries.
Because we don't forget the big countries don't have to play ball. They can just go to another sandbox. They don't care.
That's what China's doing.
Yeah. And China's also, there's talk of that they're loosening the restrictions on intellectual capital of the United States. So they can go and copy all our stuff if they want to. There's not a gosh darn thing that we can do about it, until
they better not copy my cartoons. I'll come after you, Xi. Look out.
But imagine if they did, and you couldn't.
There's nothing you can do.
International, they catch you into the. One of two things I think could happen here, right? Resolution with all these different countries. We move quickly back to the upside because the market will respond to agreements in place.
Yeah.
Or there's still more shakeout that needs to occur. There's still more profit taking that needs to occur at this point. All right. Remember, we had this big run up, and we're only shaking out a certain percentage now, right? This is the reason why corrections are healthy, in my opinion. So take that a step further. If this goes on, I don't think it's going to go on more than a week right now. But there have been
just
cases,
a week, only a week. You mean a week total from last week, or
I'm talking
another
about,
week?
Yeah, I'm talking about the back and forth. Upside, downside, because not all, what is that saying? All darkness has a dawn, right?
It's always darkest before the dawn, yeah.
Right. It's always the worst case scenario. Everybody's flipping out. And if you can keep your head while others are losing it, you will win bigly, as that guy says.
That's true.
More importantly,
there are definitely some bargains out there, no question.
Oh, yeah. And that's what I want to focus on, guys. You want to focus on stocks that have been really beaten up, but the known names, we're talking about companies that are making 100 billion every 3 months. Yeah, this is going to affect them a little bit, but the long-term prognostications are all positive. It's just going to affect the next quarter's numbers. So we have to keep that in mind.
Aquiles, can we talk a little bit about foreign exchange? I took note of the fact that the U.S. dollar is weak.
Hold on. Let me get in there. Hold on. So I wanted to dovetail on the whole madman theory thing. Is it seems like the madman theme, the crazy guy theme, is a thing across the Trump administration, right? And we saw before Trump even got into office, when Javier Milei took office as president of Argentina, that was December of 23, I believe. So a solid year before our elections happened. And Javier Milei, that is, always said he was a big fan of Donald Trump, and he believed Trump was going to win, and he was pro MAGA, and he wanted to do Argentina to be, make Argentina great again. He copied the whole MAGA theme, right? So when he took over, he inherited an economy that was in severe distress. There was hyperinflation marking like over 200%, something crazy, like 220% or something like that. They were in steep recession. GDP went down almost 2% when he took over. The poverty rate was almost 50% when he took over. Everything was bad. Everything was in the toilet. But then his administration comes in, and I still remember, because I covered this, that he said he was going to do shock therapy on Argentina. And then he brought out the chainsaw, he did the whole, the whole bit with the chainsaw, and we're going to cut everything. So he wanted to cut government spending, which he did, which we're also seeing mirrored by Elon Musk. He wanted to deregulate a bunch of stuff, which we're now seeing with Donald Trump, with the EPA and all of this stuff, a lot of deregulation. And then he devalued the peso by 50%. And those policies were, trying to tackle this hyperinflation, the deficits, whatever. And he plunged the country deeper deeper into recession, deeper into pain. I guess I can just say more broadly, right? But then 1 year later, Aquiles, 1 year, I was shocked, but the result was in 1 year later, inflation dropped from a monthly rate of 25.5% in December 2023. I'm looking at some notes here, to just 2.7% in 2024. That's 1 year. So they suffered a lot of pain for 1 year. I mean, is that the same strategy you think maybe Donald Trump's administration is doing? Maybe they're talking to Javier Milei, and I mean, we saw Elon Musk, at CPAC with the chainsaw gifted to him by Javier Milei. Is that perhaps what they're doing as well? And we're just going to suffer for a year?
God, I hope not.
But I mean, the long-term correction, maybe.
It's bad enough that and this comes from a Latino point of view. It's bad enough that the Argentinians, who are such a proud and wonderful people, brag about everything, and all of a sudden we're going to give them something else to brag about.
I get that joke. I know.
No,
I
no,
get
no.
it.
So the reality is, crazy like a fox, maybe. In the last administration, there are a lot more people who were, had their own agendas and were not just saying, hey, we're going to do whatever Trump says, we're going to do it, but we're going to try to rein him in a little bit. This time around, we don't have that. What we do have, though, is the fact that we're going and making these uh, negotiations with these different countries, which wouldn't have happened without a tough stance. But then what happens after that point, is anybody's guess. We are not going to see, we don't have anywhere near Argentina's their inflation rate
Oh, yeah.
because we have responsible governance here. Argentina has a lot of corruption, typical with Latin American countries. Right? They also have a lot of bureaucracy as well. So, in some facets of that economy, all welcome. Hey, what we're doing is not working. Let's try something different. So they did. And let me tell you, some guy asked me about a year ago, do you think that this is really going to make a change? And I said, well, if the people are willing to make the change and the government's willing to make these institutional type changes, then great. But I don't see it right now. And I was wrong. It got better. Right. But here in the United States, the factors are so much different. Right.
Yeah,
And
yeah,
you can
yeah.
try this, all right, but you're not going to bring inflation down to zero, not in its current state. These things are, if you were to see a graph, they're on a wave. Okay. We are going to test new levels of inflation. We're already seeing it right now. uh, we're definitely going to see a couple of months of negative GDP, maybe a little bit more. We're also going to see higher wages than you thought. Okay, I mean, I'm sorry, not higher wages, higher costs than what you
Mhm.
thought. All right.
Yeah.
Reason being is that all these tariffs are going to affect us somehow. I don't care if it resolves itself tomorrow. The damage is done. All right. And companies have went out and bought inventory all along. And that is going to affect us because it's more out of our pockets. Cars, electronics, especially
Absolutely.
electronics, 30 to 50% higher, right? Where are you going to get that? And let me tell you, when corporations get a taste of that higher price, they don't want to let that go. It's
They're
like it's
Yeah,
like
they're
a
gonna
new
pass it down to
tax.
us, right? They're just gonna pass it down to us, so they get all the upside.
Yep. Yep. So what you think you're doing, you think you're making them pay their fair share. The truth is you're not doing a darn thing. You're making me pay more money for a good that I want. All right.
Right.
Now, for people who are not worried about money, that's no big deal to them. But for people who are living paycheck to paycheck, which in the United States, it's roughly 70 to 80%, all right, those people are going to be, if you don't have good technology, you are behind. So we're going to see even more of an income gap created from that. My opinion. We're going to see prices begin to rise across the board, whether it be clothing, electronics, cars, parts for those cars. All right. Toyota talks about, well, all our stuff is built here in Kentucky and where's the other place? New Mexico, I believe it was. But what they forget is that not all Toyotas are built here. There are a lot of
No.
Toyotas that are coming from other places. So they're saying, well, it won't affect us as much. I believe Honda and a couple of other companies. Who knows what's going behind the scenes? And I'm not a conspiracy kind of guy, but who knows what's going behind the scenes? Because you say to yourself, okay, well, we got this going on, but at the same time, we're still paying more for our goods and services. So, what have we really accomplished here? And I think that is, if we talk about this a year from now, may be much ado about nothing. But that's only because of the resiliency of not the American consumer, but of the corporations. And some corporations are, if this were to continue, are going to put even more pressure on this administration to retract these tariffs. And that's what I see happening on a smaller scale, kind of behind the scenes, kind of push the other countries to get a better deal. But I
Kind of
don't
like a
really
bluff,
see it.
maybe like we're playing poker.
Yeah, crazy like the fox. They used to say that about George Washington, right? He was crazy, crazy like a fox. He outwitted the British, during the Revolutionary War by making like he was retreating, and then all of a
Mhm.
sudden a bigger force met with the British at another place. So I'm see it doesn't mean I'm right, but what I'm seeing right now is we are playing around with these things. But at the end of the day, I think that the American consumer will lose out. It's going to cost them more money. It already is. We're already stretched as thin as we can be with a certain amount of the population. Why do we have to do this? If we have to do this, then do it on a smaller scale.
So
Don't just have, go into this willy-nilly, say, well, you're going to hurt for a little while, but why should I? You know, if you do
I,
your job, I shouldn't be hurting at all.
Right.
There's
Achilles,
better ways to lower the prices.
what is the pressure look like inside the Oval Office? I mean, we can tell the president's getting it from his messages on Truth Social and everything. He's responding to it. Are these calls from CEOs? Are these from within? Is this his own financial team? Are they getting the calls and passing them on? I mean, there's got to be obviously a lot of very unhappy captains of industry right now. What does that look like? And, right now, of course, Trump is showing his usual bravado. Nothing will change my policies. But in reality, the heat's on, right?
Yeah, the heat's on right now, especially with this type of rundown, because if you think about it, the average investor will sell during this time.
Hmm.
We're not dealing, we're dealing with emotion. So
Mm-hmm.
his people are saying, or the people who are actually contacting him and influencing him, now he doesn't care left or right about it, but it's starting to seep in that, okay, well, I got their attention, but maybe this wasn't as much of the attention that I kind of wanted. Maybe we should have done something a little bit different. Maybe we should have somewhat uh, tethered it back a little bit, but who knows? Who could speculate what's going on with this gentleman? Also, there's been talk of mental incapacity, you know, or degradation. I don't want to say that, but it does happen, where you're just not as sharp as you were when you were in your 20s. That's a fact.
And
So
Donald Trump's he's not a Wall Street guy. He's a real estate guy.
Right.
And
Right.
and they ain't the same.
but yeah, and Wall Street controls a lot of the behind the scenes with companies. If you're not performing
Mm-hmm.
as the CEO, you're out. And then they bring somebody else in
Well,
who will, you have, this is just a fact. You get
more
enough
and
of
more
these
so they
people.
are. You Wall Street guys, more and more these Wall Street guys, remember these portfolios are buying up all the single family homes out there in the market
Robbie
more
has a
than ever.
question.
So, that they're starting to control housing as well. So it's kind of, we saw in 2008 the overlap, right, of the real estate industry and stocks because they were, rolling these into portfolios. But now the hedge funds are straight up buying properties, like whole swaths, whole neighborhoods in middle America, anywhere town USA. And that's so, that can really, I feel like you can't separate the two anymore, Wall Street and housing.
You're not wrong, Manila, but at the same time, they get rid of it as quickly as they acquire it.
Are
They
they
they're
selling
not
them?
emotional about. Yeah, you'll see as they go along, they'll get to a point where they feel, okay, our valuation's here, we got a guaranteed profit of XYZ, we're out.
Mm. Oh,
I've
that's
seen
good
it.
to hear, I think. I think it's good
Well, we
that,
see it with the
you know
REITs. The REITs
yeah,
will go and do strategic acts, the REITs, real estate investment trusts. So we'll see them do strategic acquisitions all the time. Doesn't matter the sector. Very
yeah,
into the multifamily units. They may not go singularly like the hedge funds into the single house because there's very little profitability in that.
yeah.
So unless you have a swath of terrain, and they're developing where there's more money involved. I don't see it as a long-term hold for them. I see it as a short-term, and let's get
That's
rid of
good.
this and let's go back into our strength. They might diversify that to, in my opinion, they might diversify that to really just get some more income somewhere else.
That's good. And Robbie has a question.
Yes, I have a real quick one. So you mentioned that prices are going to be going up, and I mean, we know the wages haven't been going up now for years. Could this be a strategic play by Trump? And I use that word loosely whenever I talk about Trump because I don't know if he has a strategic thought in his head. But could it be that he is banking because supply and demand is still a thing? If you price out 80% of the American consumer, that's going to cause pressure on these companies. Could that be part of the strategic analysis for Trump going forward to try and bring back investment, start bringing back domestic production into this country for the tariff relief for those companies to, on one hand, increase wages by bringing back higher paying industrial jobs, while also creating downward pressure, on retailers like Walmart and other things? Or do you think that doesn't even factor into the equation here?
I think it's a lovely idea in theory. I don't think it's really practical at this point in time. How do you reverse 40 to 60 years of, oh, we're going to foreign markets to get a better price? You're going to do that in 1 year? He doesn't even have enough time to do it. 4 years to try to reverse that trend? Forget it. That's not
Yeah,
happening.
if you're thinking about if you're a CEO and you're thinking, oh, let's build a factory in the United States, it'll be better than Vietnam or whatever. That factory is not going to be operational until the next president, and that could be a pro trade Democrat.
Yeah. And what I'm thinking could be, and I'll drop off after this, Trump has been really trying to apply pressure on the Fed to try and get Jerome Powell to lower interest rates and that type of thing. And with what the Fed's mandate being one of them, control prices, but also unemployment, could this be his way of trying to strong arm the Fed in lowering rates to make borrowing money cheaper? And that's what this is all about.
This is exactly what it's about. All right. When you're an economist, all the economists have come out and said, well, we don't agree. Even Jeremy Siegel, who's one of the most bullish guys I've ever met in my life, came out with a scathing report on what he's doing, basically saying, hey, he doesn't know what the heck he's doing out there. But Yeah, this is a strong arm tactic. Trying he in his head, well, Jerome Powell is not going to do what I'm telling him to do. He's not playing ball, so I'm going to strong arm him into doing this. And let me tell you, Fed governors don't like being strong armed. You're
How does
not
more
going to win that way. All right. So go ahead.
how does more debt, I mean, help the American family? How does more debt help the country? I mean, I don't understand. Why would you do that? I mean, most
Well,
Americans are already drowning in credit card debt. So why
it's
would
not
adding
geared
more?
it's not geared for the American consumers. It's geared for the corporations who can go and refinance the debts that they have across the board and make more money that way. And the
including the
rationale is
country's
that
debt.
it'll trickle down to the American consumer, which is a fallacy. That economic theory has been debunked so many times. They're still talking about trickle down economics. It's such garbage, guys. I can't even entertain that thought.
So then this is just another wealth transfer from the working class up to the rich who already have more money than God, is what you're saying.
For corporations,
Yeah.
and tax breaks for the
Yeah.
rich. They got to justify these tax breaks, guys. If you think about it, they got to justify it in one way, shape, or form. Okay, we're going to take some from the government. We're going to take some from these other places and the like, and we're going to come nowhere near what we need to sell this tax cut bill. But who cares? We're in power, and we're going to do whatever we want to do.
More good news. Thank you, Achilles.
I'm full of good news today.
Well, I mean, I recently heard a libertarian kind of simplified explanation of how they view Trump, being that he's not a stocks guy, he's not a trader, he doesn't understand, maybe he doesn't have the full understanding of how all of that works, is that Trump keeps pointing to trade imbalances. Let's take China, for example, because that is our biggest trading partner. And that Trump keeps saying, oh, there's a trade imbalance of, 26, whatever, I don't know, pick any number, right? But in the very simplified version that I heard on this podcast, that it would be as if, like, you and I, all of us, we're consumers at the grocery store. We go to Kroger, we go to Safeway, right? And we keep giving them our money to, buy their goods because we want it. We want the cheap goods, right? That's what we want. We go to Dollar Tree, we go to whatever. We need this. We need a little hand shovel or whatever at Dollar Tree. I want to buy that dollar hand hoe, right? We keep giving them our money. Dollar Tree is in no obligation to come to my house and say, hey, I want to buy, can you make me a sandwich? I'll buy a sandwich from you, right? There's no obligation of Dollar Tree, so it's like tit for tat. Like, okay, I buy something for $1.25 at Dollar Tree. Dollar Tree should come to my house and buy, I'll make them a sandwich and they buy it for $1.25, because ergo, then there's no trade imbalance, that by Trump's line of thinking, if you apply the same logic, then if it's a dump of cheap goods into America, then what if China gave us everything for free? If everything was free, can you still say it's worse for America now? It's worse for Americans because they're giving us free Chinese goods?
Well, if it's free, it's communism.
But that's what I mean. The logic doesn't stand, right? Because he's like complaining.
It makes no sense whatsoever. Yeah, let's break it down to its simplest components. All right, you're paying more at the grocery store for goods that a year ago you might have gotten a little bit less. All right, but the prices always go up. Corporate greed doesn't change. That's a simple fact. That's not going, it's until the American consumer says and starts pushing back on the pricing and doesn't buy as much, and it affects corporate earnings. Back in the 70s, we had there were several movies that highlighted what was going on with the gas thing, and how it was affecting the American consumer. this is not too unlike that, except we're going into different areas. We're seeing oil at a certain level right now. We're seeing gas prices not really as affected per se, but your rice staples, your meat staple,
Mhm.
everything is controlled by 4 to 6 companies here in the United States,
Yeah.
and one of them's Chinese, Smithfield, right? They
Yeah.
control most of the meat consumption here, you
Yeah.
know?
Our bacon.
Yeah, yeah. So, we have to say to ourselves, at any point, is there a way that we can push back and say, hey, we're not going to buy as much, or we're not going to buy it at all. We're going to find all other alternatives that might be a little bit cheaper. Or, do we need to start going out to the farms and buying it directly? Because some people will do that as well. I see that all the time, Um, and by the way, we don't have to worry about the pesticides and all these things because
That's right.
it's originally organic. But who in the American public can really afford to do that long term? It's not a sustainable thing at this particular point. So we need to get back to these companies and say, hey, we could afford it at five. Let's just say, for argument's sake, we could afford the rice at uh $20. But here you are putting it at $26 when a week ago it was 21. you know that's how
Right.
I'm kind of looking at this. Commodities go up and down all the time, yet some prices never move, and that's really because there's some cost control there by the corporation to keep their profitability and that sustainability.
And Achilles, we have a viewer question for you from Adrian. Adrian wants to know, let me pull this up here. He wants to know, when are the banks going to write down the value of their commercial real estate loan book? And have these loans been repackaged into CDOs like they did in 2007?
The question is, it's a great question. Thank you for that, Adrian. The question, I should say, the answer is that I don't see that happening anytime soon. The commercial side hasn't learned from the bloodletting that
Mm-hmm.
occurred these past couple of years. They are still going as if it was day one. You know why? Because they have enough cash and enough time on their side to ride out the storm. So I don't see it. Could be completely wrong, but the commercial market, in some areas is actually pretty robust and they're doing well. It's not across the board. All right. Here, there's a lot of here in New York, should I say, there's a lot of companies that are just, you know, they're they're going to stay doing what they do because it's all that they know. They're not going to convert commercial to residential. That's, a far off dream, to some people. Hey, let's get more housing. And they're
Yeah.
not going to do that. It's not profitable. Corporations, conglomerates, REITs, they're going to do whatever hits that bottom line so they can pay out their 90% out to the investors, right? Which is they're required to do. They are not going to get altruistic by any means, or philanthropic in any means. They're going to stay the course, keep doing what they're going to do, right or wrong. Not much is going to happen there. So sorry to let you, I'm trying to break it down, let you down gently, but that's what's going to happen.
Well, that
Yeah,
seems
I
like a
think,
good place to leave it.
yeah, leave it there. Perfect. Right on the hour. Aquiles, we always appreciate your insights, especially being there in New York City, and you got your finger on the pulse, and you have, your investors are there, so
Achilles, are you
know
chomping at
how
the
people
bit to get
feel.
in front of your computer and start trading?
You know what? I always hold back a little bit because I love these rundowns. And, I talked about this on another show the other day. There are great opportunities at any moment to make money.
Mhm.
And, think about it. Say you shorted the last few days. If you
Mhm.
had the gumption to go do that, you would have really done well, you know,
Sure.
covering your
How many
shorts today.
How many days? How many? Is it still 90 days that you have to buy back?
Yeah. You're thinking of the wash sale rule?
Yeah, yeah.
No, I think they've changed that now, but I don't have that in front of me. So I think they actually might have made it shorter that now. But don't quote me on that.
But the point is, it's like, yeah, so there's sort of an inherent implicit rules bias in favor of higher pricing, right? Because it's, buying's open-ended. You buy, you don't ever have to sell. But if you sell short, you do have to buy it back.
Right. So think about it. You got a company that went from 100 to, let's just say they're 60 right now, right? That's a 40% discount, guys.
All in your pocket.
They pay you out a 6% dividend or 7% dividend. Why would you not pick them up?
Right.
Why would you not go buy them? That's what I love about this industry, that we're able to, sometimes they call me a bottom feeder. I'm like a catfish. But I'll go in and yeah, exactly. I'm going to go in and I'm going to buy that stuff when everybody's looking at me doing this, the head shake, but I'm going to go in and I've never made money back from these downtrends. There's always this opportunity. And that's why you cannot panic. This is why you should never sell. You know when it's time to sell? When the CEO has done impropriety, when the board was in on it, when it's criminal what's happening.
Yeah.
That's the time you sell. But I can't fathom any other reasons, to take this and not take advantage of it in your 401k. Maybe you raise the 401k percentage up 1% or 2%. That wouldn't kill you paycheck wise. So maybe that, or in your IRA. Wow, I got to file my taxes and take some extra deductions this year. Let me throw an extra 100 in there if I have it. $50. It doesn't matter. The point being is that you will thank your lucky stars if you take your advantage now, in my opinion.
Yeah, good stuff. You can see more. It's at the bottom of the screen there. You can see and learn more from Aquiles at larreawealth.com, and go check out his newest book. Let me get it on the screen here.
Well, it's behind him.
Screen. Well, it's behind him too.
It's
but
right behind me.
In case
that
people don't know,
guy behind me.
There you go.
That's it. That's the book right there. Wise up with your money. Aquiles, always appreciate your time. Thank you so much. Always a fun chat too.
Absolutely. It's a pleasure's all mine. Thanks, guys.
Enjoy
your week.
Talk to you later.
Thank you. See you soon. Bye-bye.
Bye.